Good morning, everyone, and welcome to today's edition of Frontier Opening Bell. I am Bosin Omofaye. It's Wednesday, the 17th of June. Let me introduce my panel to you. Joining us this morning, Ali Khan Sacho, the CEO and founder at Rich Frontiers Management in Nairobi, Kenya. Thank you, Ali. Good morning. It's good to have you on the East Coast as always.
Thank you. Pleasure to be with you.
Great. And to cover the Francophone, West Africa and North Africa for us on the show today is Adama Aristide Ouattara, who is a partner in charge of risk advisory at Deloitte. Is joining us from Paris in France. Good morning, Aristide. It's good to have you on the show.
Good morning, everybody.
Thank you very much. And Uchenna Menis is an FX trader and managing partner at Blue FX Nigeria. Uchenna is with us here in Lagos, Nigeria. Uche, good morning.
Good morning, boss, and thank you, everyone.
Great. I think we have the whole team in the house this morning. Wale Olusi is the head of research at United Capital, an investment bank listed on the Nigerian Stock Exchange. Wale, good morning. It's good to have you. Been an interesting
Good morning, boss. Yeah, good morning. Thank you for having me.
Thank you. And Luke Ofojebe is a team lead in charge of equity research at Vectiva Capital Management, another investment bank and a licensed securities trading firm. Luke, good morning. It's good to have you on the show.
Good morning, Boatin. Thank you for having me today.
I understand for Ali, it's about lunchtime in Nairobi, so we understand you need to go to lunch. Sorry.
I had an early brunch.
so let's have a brunch from the East African market, but quickly give everyone a snapshot of where we finished off on Tuesday. For some of the African markets we cover, the Nigerian market was down 0.1%, but the same margin for the composite index for the Ivorian market, the BRVM, based in Abidjan. The Egyptian market made a very big surge. The top 30 index, 2.50% in the positive territory. The Kenyan market did 1.04%. That's the Nairobi Securities Exchange. And the South African JSE All-Share Index, 2.55% on Tuesday, the second trading day, with a big news around the US Fed, the likely $1 trillion infrastructure fund from the Trump administration, and the positive news around coronavirus treatment from the UK in the Europe as well. So this looks like some good news. That's it. But let's talk about the East Africa. I'm sure Ali would want to, was a little bit happy about the deal to get the coronavirus treatment. That's one good news around the world. Ali, the Rwandans are interested in building an international financial center. Just a little bit of what the South Africans have. So this is a very big, ambitious one. We want to talk about that. Meantime, Kenya's Samia Africa is holding a virtual AGM. Sanlam is also doing an AGM first week of July. But this insurance company is back in profits, about $500 million Kenyan shillings in 2019 full years, doing an EPS of 79 shillings, which is a positive one from a negative 14.01 in the previous year. Ali, come in here very quickly. Which of these is your big story?
So I have plenty of stories, but let me start with Rwanda first of all. I think that's very ambitious. But what I must say about Paul Kagame's Rwanda is its execution is flawless. Where the bigger boys like yourselves, like South Africa, like ourselves, I just find us very sloppy, very disjointed when it comes to execution. So if I was to put money to work, I would actually put money to work in that Rwanda financial system. I think Kagame has proven that he's nimble, agile, and quick time and again. And I have every reason to believe that they're going to show some of the bigger folks around the continent a clean pair of heels. So that obviously caught my attention. Just to go pretty wide-ranging today, if you don't mind, Zimbabwe reported 785.55% inflation rate, which is almost as extraordinary as Caracas tends to report. And really, this is the primary problem for anyone looking at Zimbabwe is you've got to get your mind over this extraordinary hurdle rate. Congo got given $1 billion by the World Bank for COVID and education, but also there's a big trial there of President Tshisekedi's right-hand man, Vital Kamerhe, and there's been an announcement that the judge who was presiding over that case, where they said it was natural causes, but now they're admitting that he was in fact murdered. Tanzania dissolved the parliament yesterday ahead of elections in October. This is John Pombe Magufuli going for his second term. A lot of people think, he's announced already that Tanzania is COVID-free, but not many people believe that. And then the final point to the east of East Africa, Mauritius, has come under a lot of pressure from the European Union regarding the integrity of the financial markets there. And I think that's interesting to watch.
Yes, quite a big story about the Mauritius, which is touted as a stable financial center in Africa off the coast, that's Indian Ocean economy. And of course, to look at the money laundering, financial or terrorist financing story. And we saw that yesterday. That was getting investors spooked and looking for safe haven, other havens elsewhere. That's going to be a bad news for Mauritius. So we'll take time maybe tomorrow to look into the impact on the currency and the stock exchange in Mauritius and how the wider implications of this for Mauritius. Well, thank you, Ali. Just a second. So let's talk about West Africa very quickly. Nigeria is in the news this morning. The inflation for the month of May came in not significantly higher than expected. Ayodeji will speak to that in a couple of minutes. Meantime, Securities Africa Financials rejig Zenith Bank's outlook says in the full year 2020, 31.5% drop in the blue chip banks' profits after tax. That came out yesterday. BRVM Sonata listed on the Ivorian markets launched 100 billion CFA's bond, while the Ghana Commercial Bank was made a led the index of 0.33% on Tuesday. But again, let's get Aristides to talk to us about the West Africa's market. What's your outlook from Paris on these regional markets in West Africa?
Yeah, thank you very much. So the outlook there is, I think, as for the other African part, we have quite some concern regarding the COVID-19 impact. Okay, if you look at the economic growth provision before the COVID-19, we targeted a 6.3 growth in 2020. That was before the beginning of the crisis. Now, according to IMF and also the central bank, the growth will be around 2%. So this is on the economic base. On the inflation also is rising. The last report from the central bank is an inflation around 6%, but this is quite low compared to other parts of Africa. But since we have a currency that is linked to euro, but we have.
Understood?
Yeah, do you hear me?
Yes, please go ahead.
Yeah.
So
okay.
When you look at your outlook if you look at your outlook on economy, on inflation, and the pandemic, what's your take on the financial markets or currency, which is a CFA, which has been in some conversation in a bit of a topsy-turvy with the rest of the West African region?
On the currency, as you know, everybody, we are changing the name of CFA. We're moving to ECO now, and on this base, I think this is quite an opportunity to give to those countries the ability to adapt the currency policy to the current situation. For example, as you know, we have some concern on the importation, for example, of medical supplies, and the different countries in Western Africa have quite some issue because they cannot adapt the currency in order to reduce the cost of this good that they are importing.
Interesting. Okay. hold on for us, Aristide, who talk a little bit about the North African market for the French-speaking Morocco, one major market, one of the big markets, economy to the north of the continent in a short while. So let's expand the West African markets conversation to Nigeria. Let me ask very quickly, Wale Olusi, what's your take about the markets in Nigeria at a United Capital?
Okay, thank you for having me, Bosin. Well, what we've seen in the Nigerian market so far in June, unlike in May, was a little bit of a calm. If I take the stock market, for example, activities have not been as active as we saw in May, where you saw, over a 15% recovery from the downturn in March. So far in June, it's been more bearish than a lot of interest in the market. In the fixed income market, on the other hand, the impact of the recent announcement by the central bank to cut interest rates, has mounted more pressure on, the rate at which banks are giving for our treasury unit, for example. Placement with the banks have dropped considerably. It also looks like, central bank is not really so concerned about the FPIs again. We've seen a convergence between the OMO rates and the NTB rates. When the central bank came around last year to dichotomize the OMO market, the open market operation market, OMO was trading at around 13% to 12%, while treasury bills, government treasury bills, were at low single digits. But what we've seen now is a little bit of convergence. It looks like they are basically selling just to the banks. The FPIs aren't really buying, and yields are continuing to moderate. We think that will continue. There's a lot of liquidity and maturities in the system. There are still concerns, though, as far if the second wave of the virus come, where would that put oil prices? But what we've seen generally has been a little bit of a cold, calm activity in the equities market, and a sort of bullish run in the fixed income market. Yeah.
Interesting. Thank you, Wale. Nigeria's inflation for the month of May came in early, just about an hour and a half ago. Ayode Jebo, the CEO at Afrinvest Securities. Ayo, what's your reading of these latest inflation numbers for Nigeria, and do you think the market would take any hint from it as to where we're going with all the fears and anxiety over Nigeria's inflation coming through from food basket?
Yes, okay. Thanks for having me this morning. The inflation rate came in below our expectation at 12.4% compared to last month at 12.34%. But if you look at looking at the sub indices, food inflation printed at 15%, which 15.04%, were just 1 bips higher than last month, and that increase, the increase we saw, can be linked to the rise in bread and cereal prices, and that the reason for that can easily be identified. For most people working remotely and kids also at home, that's what most of them also feed more on. So it's not a surprise to see that spike. Coming to, but on a month-on-month, and
the kids are out of school as well. So cereal, yes.
Cereal, yeah. So cereal. So it's not a surprise that it topped the change year on year. And looking at it on a month-on-month basis, 1.42 for food inflation was 1.42 month-on-month. It still looks very, very reasonable relative to expectation, because when you check prices of food prices have increased, especially because of the bottleneck of transportation due to the lockdown across the states. Though there's no major obstruction, but we know how it operates in Nigeria, the bottlenecks of moving things in Nigeria. And when you also look at the core inflation still remain flat at about 10%. We are yet to begin to see the impact of the depreciation of the Naira. The major impact or pressure that we saw came from mostly transportation and pharmaceutical, and then the pharmaceutical sector. So, but we feel that in the coming months, we should begin to see that impact of FX. When you look at what the rate was in April or in May relative to what it is now, that will begin to, once they begin to import, we'll begin to feel that impact. And for food inflation, in terms of our expectation, we don't expect it to increase more significantly from on a month-on-month basis based on the higher base level, because we feel demand will remain around these current levels. And for most of the producers would have also adjusted to the increase in demand. Though we are yet to get into the harvest season. But by and large,
okay.
For investors, yeah. Hello? Hello?
Who is the team lead in charge of equity at Vectiva Capital, what are his thoughts about the latest inflation number? Where do you think there will be something? Is it for the equities or the fixed income market?
Thank you, Boateng, for your question. So the thing is that the reality for us has not materially changed in terms of inflation figures and its impact on the financial market, because since late last year, when the CBN introduced a dual market system in the fixed income space, where we have the NCD market as well as the OMO market, we've seen yields decline significantly in the NCD market. So since late last year, we've been having that negative real interest rate for investors, basically, because you have interest rates at, that's the yield basically, at the NCD space currently at about 5%, and you have inflation well above that at about 12.4% now. So you have a negative real yield of about 7%. So we think what this means is that it's going to put pressure on fund managers across the country, basically, in terms of seeking alpha going forward. So given that, we think a number of them will be looking at increasing their exposure in the equity space. However, they will need to be cautious about this, because at the moment, foreign investors who will consider to be a major driver of sentiment in the equity market at the moment are not showing interest in the equity space. So they will be conscious in terms of how they go into the equity market. But the reality is that that's the only available option for them right now. So we might see them increasing their exposure in the equity market. And also, given what we are seeing in oil prices, we've been seeing like significant improvements in Brent, and the expectation is that going forward, we'll continue to see recoveries in oil prices due to the fact that a number of economies around the world will be loosening their social distancing measures as well as lockdown measures. So that can also support demand for Brent and also support oil prices going forward. So overall, we see that also impacting the equity market going forward. However, there is this fear of a possible second wave of the virus, but we do not think that will actually compel a number of economies to embark on lockdown again, as it is, because what it is now for a number of these economies is that it's something they will just have to live with. So they realize that locking down their economies might not be the way forward. So overall, we think it's a positive one for the Nigerian economy.
Lockdown is not the answer. I think there's a quiet consensus around the world that we just need to find our way around it. Thank you. Let's just take a quick one and in touch with the Southern African markets, the GSE, and Ali spoke a little bit about Zimbabwe's inflation at triple digits there, something that you just keep in the news box. But let's bring on the South African market. Mauritius was also touched on a bit of that negative news. and actions from the EU about the blacklisting, terror, money laundering, whatever in Mauritius. The South African rand softened about 0.5% yesterday, 17.2 against the US dollar. So, Ali, come back here with this just about a minute into the South African market. Is it the currency that you think is still the big play here?
So like I've been saying for the last few days, we've had this enormous rebound from levels above 19 to actually 16 handle. We're now beginning to retrace a little bit, popping over 17. And essentially, as I've said before, the rand, in my view, has a huge correlation with global risk appetite. And I just, for one, and maybe others will disagree, think the valuation and the pumping up of the US stock market is now beyond any reasonable measure of rational economic policy making. I know they've got an election coming up, but I really don't believe that, you've got the most expensive stock market since the 1930s on any price earnings perspective. And therefore, I'm just sitting there thinking that, we might move up a little bit more in terms of risk appetite, but we're coming right. It's like an elastic band that can come back. And therefore, I would be saying that the South African market looks, the currency looks rich to me. I think the risks are to the downside. The Johannesburg Stock Exchange, look, it looks fairly priced to me. You've got banks which are going to be under quite a bit of pressure. The news you were talking about in Botswana was interesting, that they're doing some kind of equity offer. That was will be an interesting temperature gauge as to what the appetite is in Gaborone, which of course has been locked down again. And then finally, the Lusaka numbers just tell us what a torrid period the Zambia economy has been having. Less than $1 billion of foreign exchange reserves, probably the second worst performing currency in the world. Things are not very good in Zambia. They probably need a big recovery in the copper price.
I think right now what we are seeing is, as we're seeing a bit of significant, should I say, monetary policy and fiscal stimulus from both the Federal Reserve and the US government, trying to pump up price and provide investors and business sentiment into the market. But to one thing that has caught my attention in recent time is that Beijing is starting a lockdown today, highlighting that there is a new strain of coronavirus. And if we are going to listen to modern history, we would realize that this was the same, should I say, route before the coronavirus pandemic.
Okay, so
wrap it up in 1 minute.
Yeah, okay, very quickly. So the National Bank, but they dropped the policy rate, monetary policy rate by 50%. To 1.5% during the last month. And the decision aims to mitigate the impact of the pandemic and support economic recovery amid a lack of inflationary pressure. The headline inflation fell further 0.9%, and this is due to the lower price of fuels and lubricant, and they expect that the inflation will be around 1%. Okay, both in 2020 and also next year. Regarding the outlook, we think that the economy will contract and the growth will be around 4% compared to a global a growth of 6% before the crisis. Okay, so that what I can say in this very short time, and hope that next time I will have more time and we will have a less network issue to deepen all of this economic outlook and market outlook on West Africa. And
yes, you have about 10 seconds. Let's just let me say this. Thank you, everyone. It's been a very interesting Wednesday to.
That was tough.
Thank you for having me.
All of you who are members of the Ouattara from who is a partner and Deloitte in Paris, Ali Khan Sachu from Rich Frontiers Management in Nairobi. Thank you so much. Uchenna Minis from BlueFX Nigeria, Wale Olusi from United Capital, he's the head of research, and of course, Luke Ofojebe, the team lead in charge of equity research at Vetivo Capital. Thank you so much. We'll see you again tomorrow, Thursday, 9:30, bright and early. Thank you so much, everyone. Have a great day. I am Bosin Omofaye for Frontier Africa Report.